The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start the show like we usually do, taking a look at the DAX. You can see here that we've had a really sharp rally coming off of that major 1.618 expansion. We've been in a consolidation zone for several hours now here in the DAX. There's a huge divergence today in the S&P and the DAX and the NASDAQ and the Dow Jones being the weakest, of course. The Russell has actually, is not the strongest, of course, has been the NASDAQ, but the Russell has been extremely strong. We right at the 78% level yesterday, and that takes us a little bit higher. But the E-mini S&P has been under a great deal of selling pressure on a relative basis, because if we take a look at this E-mini S&P here, you'll notice that we've got a potential here to retest that 61% retracement up here at the 2734 level. And this could be the end of a 5-day rally, folks. That's what the possibility is. But if we get much above that, we could be looking at an ABCD structure, that could take it much, much higher, all the way up to the 78.6, which is another 40 handles higher. We will know probably after the first half hour of trading, what the scenario is going to be. They're either going to sell the opening or it's getting ready to break out. We'll know when that happens. So pay particular attention to it. The one thing that we want to do is take a look at the gold market, folks. We keep bouncing off of that 1340 level. I still think we've got a chance, and we will see if we can do that in the next few days. Get it down below that 1300 level one more time, and then we got a chance, for the big drop that would take us down, maybe even down to that $1,250 per ounce level. I'm not sure, but it's still bouncing off these numbers, so it certainly doesn't look like it wants to go higher as of yet. It had a chance when we were up at 1345. We've now dropped $17 an ounce from that level. There should be some support in here, but failing 1320 tells us that this is looking like more to the downside, and all these rallies have been nothing more than a rally in a bear market. That's really what it looks like. There's not really much that you can say about it. You can take a look at yesterday, and we'll get this up here so you can take a quick look at it here. This is where we were yesterday when we were on the show. We came down and we went below that 1328 level. We're now trading around 1325, but that's just a big ABCD structure. Folks, I just want to take a minute here. We're very lucky today because I happen to be trading with my good buddy Byron Tucker. We were chatting with another old friend from the Florida Exchange, the guy that ran the Swiss franc pits for many, many years, and we were talking about the days and the pits and stuff, and they were talking about a situation that happened way back in 1984. Byron was in the pits trading, belly to brisket with everybody else, and is yelling and screaming and more chaos than you can ever imagine. And the ways the traders kept track of this is they used hand signals, because you actually couldn't hear very much in the pit because there was so much screaming. So a hand signal, and they could read your badge, so they knew what your badge was. And I think Byron's badge was BT, as I recall. And he was trying to sell 15 Swiss francs. Well, if you're selling 15 Swiss francs, the signal is a 5, and if you put the 5 above your head, that was 50. But if you put the 5 below your head at your chin, that was a 15. Well, when it's real crazy in there and everything's running around, sometimes brokers would make mistakes, and that's how out trades would happen. Well, Byron sold his 15, and then the next morning, Scott's came up to him, and what was the name of that, Byron? The gun dealer that was the out trade? Yeah, Rich Scanlon. Yeah, Rich Scanlon was the out clerk trade, and he says, "Hey," he says, "you got a 35 outlet out trade in the Swiss franc," and he was short 35 Swiss franc from a much higher level, so he had a huge profit. And then what happened was they went over and they worked it out, and they split the difference. But anyway, we got a caller today. Yay, from California. Daryl, are you there?
Yes, sir. Good morning. I was wondering if you could comment on the Canadian dollar. Obviously, there's a lot of news. It's been moving around here a lot. I just wanted to see what you thought of that.
Well, I certainly will. Now, the last time I looked at the Canadian dollar, I'll just bring this up to, I don't know where it's trading at, but we had a target for this up around the 131 level. Where's it trading at right now, Daryl?
Well, 129, and I think that it keeps failing at 130. Obviously, there's a bunch of news coming out today, and I'm thinking it. Yes. I'm thinking it goes down from from here. But I wanted to see there's a bunch of fib levels that you had commented on.
You're absolutely correct. That level in the Canadian dollar is absolutely correct, because let's just take a quick look at it. What it's doing right now. Let me pull the chart up. I can actually do that while we're talking this morning, because there is a whole lot of stuff at that. Let's just do a quick 4-hour on this, and we'll be able to. Oh my gosh, it's been here for 4 days now at this 129 level. You're right. This is really, really incredibly. It fits up with the daily chart with that 3 drive pattern that we saw. So it needs to close above 130 strongly, at least 130.50, in order to do it. If I had my choice here, I would rather be short than long.
Okay, thank you very much. I appreciate that.
Well, thanks for calling in. I hope that helps. But the pattern is certainly there. But you don't want to be short this if it gets above 130.50, Daryl, because it's got a chance to, get off to the races. So let's just keep that in mind, okay?
Understood. And thank you for the S&P earlier. I appreciate it.
Well, thanks a lot. I'm glad you enjoyed the talk. Anyway, getting back to the out trades, back in the days of, the old S&P stuff, and this was the S&P was trading in 1983 because it started in April of 1982, but there was nobody in the pit, because that really didn't start until late 83 when people started to fill up the pit, and then the T-bill pit started to thin out a bit, and then we lost the Ginnie Maes pretty much, and everybody started migrating over to the S&P, and then that ended up being the largest one of the group. So when an out trade occurred like this, the broker and the filling broker, Byron being the broker on one side and filling broker was Scott Slutsky and his firm, they had to iron out the difference of what they did. If they had a big profit, in other words, there was an error on the trade, then they split it. Now, if the other side would have occurred, that the Swiss franc took off and he was underwater then you have to figure out who made the error. So it's not an easy thing. That's why when you're trading today, boys and girls, you've got advantage like we never ever had, and you didn't have to buy a seat. I mean, you can just literally, trade for $3 or $4 a trade, and you don't have any problem. The problem is whether the internet stops. All right, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we have a little bit of levity here this morning. I'm going to share some old stories here from the old Merc floor, but I was in Chicago. This was back in the late 80s for one of the Money Show conferences. Well, that was before the Money Show. This was the TAC conference, the old Tim... what was Tim's last name? Gosh darn, anyway, from down the CompuTrack down in New Orleans, they were having a big conference there. So I was one of the speakers along with Mark Douglas, and we had a bunch of friends in from California, and we were giving him a tour of the CME floor. And so Scott Slutsky was nice enough to take her, down into the pits there, and she was standing there in the E-mini pit, right on the outskirts of it, right on the first step where the orders came through, and so it was really, really. Just showing what's going on, and all of a sudden the Fed came in and did advanced repos, and that made interest rates go crazy, and that caused the S&P to start to move quite a bit. And she was standing there, and Scott said to her, "Stay here, don't move." And he had to run in and go in and fill paper because things were really crazy. You got some really great fills during that time, and it was yelling and screaming and yelling and screaming. And about 3 or 4 minutes later, all settles down, and he goes back to her, and she's standing there, and she's literally shaking, like a tree in a hurricane, and she's white as a ghost, and she's just, almost in shock, and he tries to revive her a little bit, and she said to him, "Oh, I hate your guts." She says, "Please get me out of here." And she said, on the way out, she says, "You did this on purpose, didn't you?" And he said, "No." He said, "That was the Federal Reserve." Anyway, it was a long story that should be continued, but unfortunately, because of reviews of the CFTC and the National Broadcasting Association, I'm not allowed to tell you the rest of the story, but it was very, very funny. Okay, let's move on to that gold market, boys and girls. This gold and silver markets are really setting up, I think, for a pretty big drop. I don't know what's going to happen, but the good part is nobody else does either. So it looks like we've got a chance to get a big break in gold here in the next few weeks. There's a strong cycle signal coming in between late April and early June that we got from our good friend from Cycles Research, Bill Meridian. So we want to pay, very, very close attention to that. And I think we have the jobs report tomorrow, which is going to be a really big thing to look at. And we certainly want to, watch that. Also, if you remember, when we had Bill on the last time, he gave us March 2nd. Let's bring this up so you can see it. He gave us March 2nd as a pretty good turning date, in the S&P 500. And now we've got March 9th coming in. Let me see. You take the 8th and you add 1 day. Oh, that's tomorrow. So Friday with the jobs report, we've got a big key date coming based on, Bill Meridian Cycle Research. Plus, tomorrow, boys and girls, we have a special guest. We're going to have Norm Winsky on again because we have Mercury going retrograde with Jupiter. He wanted to talk to us about that. And then also we got a prelude to what's going to be happening with the Mercury going retrograde on the 22nd of March, which is 1 day after the spring equinox. So all of that will be very, very interesting as we look at some of these markets early this morning. But, I know that people talk about a lot of things that are going on in the market with the, what do you call it, with the people that are, let's just hold on here 1 second. I wanted to show you this gold chart here because before I forget, otherwise we're having a little bit of too much fun this morning. Hold on. Let's take a look at this gold chart. You'll notice that we had a beautiful Gartley yesterday at the 1342 level, spot on, 61% retracement from the high at 1358. Lower tops all the way through here, folks, since 1365. Now we've got a chance to see if this is going to hold at this 1312 level. The rally last night got up to 1329 and change, which is nothing more than a 382 retracement. So if gold starts to weaken, we'd be looking at 1312 as the final support. But breaking below that, then you'd be looking at that bigger move. Folks, the more and more I look at this silver position for a longer term, I really think it's got a chance to get there. The reason why I say that is it is rallying less than gold, and it just doesn't get out of its own way. It really doesn't. It's just a situation where it just does not want to rally very much. I think we got as high as 1372 or something yesterday, and then of course it starts to back off again. Okay, I have another question here about trading on the floor. What regarding that error that happened between Scott and Byron? If the profit was there, they split the profit, and if the loss was there, they split the loss. Now, the one thing that the floor broker, which was Scott Slutsky, he wants to know who is on the other side of the trade. That's the counterparty risk. So he knows Byron personally. He knows his badge. What he misinterpreted was the signal, because he thought the hand was it could have been right in the middle of the face, which would, you wouldn't know whether it was a 5 or a 15. But if you yell 15 and it's really yelling and screaming in there and someone thinks it's a 50, you could very easily misinterpret that. So that's why those out trades happened all the time. You had to have your own out trade clerk, to sort that out. That's one of the reasons, folks, after the first week, I never went in the pit again to trade. I would go into the pit and chat, but I would take off my badge and not do any trading, because my first week they tagged me for $6,600 worth of out trade errors, and I didn't realize what was going on. And from that moment on, I said, no, this is not for me. And so I would go up into Barry Lynn's office and trade at the Lynn Waldock office, and because I could look down into the pit right from the window and see if it was really busy and people were going in and out of the pit. Then I could look at the Quotron machine to see if the prices were where they were supposed to be, and that's how I did it. But being in the pit, it was not a fun thing. It was very exciting, and it looks great when you're watching the TV and stuff, but to do it day after day, not for this old cowboy. Now, someone's asked me to take a look at palladium. Ruby, I would like to do that, but I have never seen a palladium chart in the last 10 years that I can remember. I've never traded it. In fact, I don't even trade platinum very much, No, I was not in Trading Places. I had several good friends that were in that movie, but I I was not in that movie. In fact, I've never been in a movie, thank God. Well, anyway, that's I've been in a couple TV shows. I did some extras in the TV shows back in the days of Drexel. I was in an episode of course, the Mod Squad. I was in 2 of those, and I was in an episode of the Rockford Files. Twentyman and I were both there. We were in the coffee shop, and as they were filming something there at the what was the name of it? Pirates Cove. That's where the trailer for the Rockford Files was. And I think there are 3 or 4. You got $25. The only reason we were even in the darn thing was because Twentyman's girlfriend, Margot Grant, ran the catering services for these, for actually Stephen Cannell and Roy Huggins. That was the Rockford Files. They also did Banachek. That was a series with George Peppard. But we could go there and have a free lunch because it was on the movie studio. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to bring that chart of the Canadian dollar up because this is the one from the newsletter that I write every week. And the reason why that's important is I put that 3 drive to a top pattern there in the Canadian dollar. And it's really interesting there because if you look at that on a 4-hour chart, you can see the beautiful symmetry there that you have that you don't quite see on this daily. But what you do see on this daily is the potential for the double top that looks like it has occurred so far. Now, it's still a little bit early, but we've been up to that 130 level, several times, and now we're trading down below we're 129 and change level. So for 4 days, it hasn't been able to break itself out of that level. So this is actually a possibility for a really good trading opportunity because you know that if it gets above 130.50, there's something wrong with it. But that's what you're trying to do when you're watching these markets is you look at the daily, then you go down to the 4-hour and then down to the hourly. And what it's telling you is where the support and resistance, happens to be in some of these markets. And that's what we're trying to determine when we're looking at these patterns is where is the place where the minimum amount of risk is that you can possibly get to. So we'll have to just wait and see. One of the things that we've been chatting about during the time of the breaks, Byron and I and Scott, is the fact that how lucky we have really been, over the years to be in such an exciting business. And here we are. We're doing this for 35, 40 years more on my end, and we still enjoy it. That's the main thing. Scott only does it part-time now because he's involved in some other things, but he still enjoys it very much. We were chatting about our good friend Barry Lind, who we lost a few years ago. Barry had opened a big restaurant for his daughter in Palm Springs, California, and he was coming home one evening and he stopped to help a family fix a tire. And while he was fixing the tire, someone who had been intoxicated and was not he was an illegal. He was not supposed to be in this country. Hit Barry, and he was killed instantly. And Barry and I were the same age, so we lost him really quite young. And he is really what a great guy he was. He was just I actually knew Jack Waldock also from Ohio. He was a big hog farmer. Now, folks, I want to talk a little bit about tariffs. This is important because I chatted with Rich Anderson this morning and also with Cy Monley. I want to bring up the chart here for U.S. Steel, folks. Let's just take a look up here. You'll see this is the chart for big steel. They're talking about steel tariffs, folks. Now, do you see anything in that chart that would tell you that would be bearish for steel? I don't think so. This is it had some topping action in here, but this does not look like a stock that wants to go down very much. So I don't think these tariffs are going to do very much. Now, the tariff that hit the most to us so far has been in the hog market. The hog market has been the one that has been the busiest one that we've had in quite some time. And hold on just a second. I got to get this around here so we can get it up here. I wanted to bring this to your attention because this is something that was extremely important, and that is that we had came down and we stopped at this 67 level, but once this tariff thing came out, the hogs took that level out and broke badly, which was once it went below 66.50 and we're trading down below 64 right now. That told you that market was going to go a great deal lower. Here's a perfect example of a pattern that is set up perfectly. You have a beautiful 3-drive pattern in hogs. They stay there for 2 days, and once they break that level to the downside, down they go. And you don't know if that's going to happen or not. You don't know if the tariffs would have been positive or negative. But the tariffs so far for hogs has really raised its head. So we'll have to wait and see what happens over a longer period of time. And remember, the hog market is extremely small compared to the market in some of these things that we use. The interest that's going on in the grain markets is mainly related to the drought that we're having in Argentina. So that, again, doesn't have too much to do with this. As Simone pointed out yesterday when he was on the show, that the tariffs really don't affect the farmers too much anymore because the amount of food that's out there is consumed, so they're going to buy it no matter what the price. So, but they use it as an economic tool and a political tool also, unfortunately. So those are some of the things that we want to be looking at. Now, the S&P went right up to that area that we posted right before the opening, which was around 2736. The high so far has been 2736.50. The only reason we were mentioning that is because there was a divergence between the S&P, the Dow Jones, and the Russell. And, of course, the NASDAQ was by far the strongest. So we'll see if this is just a short-term move or whether it's going to have some legs or not. Another question regarding the euro. The euro is basically the same situation that we're having, folks, in the Canadian dollar. We've gone up to this. Let's just get this up here so we can see it. I hope we can anyway. Oh, not so good. Yeah, I got it here. We'll bring this up here so we can take a look at it again. Bear with me here 1 second, boys and girls. Okay. And there's the euro. We're staying around this 27.40, 27.10 level. Well, wow, Larry, try it again. 124.10. And the high has been 124.39, I believe, overnight. So it hasn't gone much above it, and we're trading below it right now. So whether that's going to be much or not, but there's a whole bunch of things happening, and that relates to that U.S. dollar that we talked about on Monday, the fact that it had such strong support coming down here in the 89.30 level, and I believe we're down around the 89.60 level right now. So it's actually acting relatively good, and we'll have to see if this pullback is going to meet our specifications down around that 89.30, 89.25 level. We will check that. Remember, we got the jobs reports tomorrow, and that always puts all the all the other stuff. That's pretty much we'll be seeing that for sure. Yes, we do roll over the contracts in the March. E-mini, the NASDAQ, and the Dow Jones all roll over. That's because they've already started to trade to June. We've already been doing that. So they'll just start rolling over, and then they cancel these things out. So some days they'll probably have all cash contracts, and we won't have to worry about these months and stuff. But back in the days, you had to remember the month you were in. M was always June, and you'd think that M would be May, but that May was K. How they figured those things? Byron, how did they figure those months out? He doesn't remember either. So, but do you ever have any more contact with Leo?
I saw him at a conference this year.
Yeah, he's still pretty healthy, isn't he? He's doing
very healthy, and they did a full-page article in the Wall Street Journal on him.
Yeah, they did a full. Yeah, they did a full. He's 85. Wow. Yeah, Leo Malama, the guy who really built the Merck, is 85, and Byron says he's still going strong. And they did a full-page article in the New York Wall Street Journal on him a couple years ago. Oh, just a few weeks ago. Oh, that's pretty cool. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. I had a question from one of our listeners, Mr. Z in Philadelphia, who was asking me if I had traded the 1988 soybean bull market, and I certainly did. At that time, I had just started the Astro Cycles newsletter, and when I started the newsletter, long story that I don't want to go into, interesting story, but not necessary right now, but I had a newsletter that was doing very well. People had bought the book, and then I also talked about other commodities and stuff. But one of the things that I did when I had the newsletter was to have a hotline. And Larry Williams told me that, you have to have a hotline if you're going to do a newsletter. And so he gave me his recording thing for the hotline. And so I had hundreds of subscribers, and I was trading the beans very, very actively, of course. And we had bought them really quite low, and they were up quite a bit. And I remember this so vividly because I had a farmer friend, one of my customers from Iowa, and his name was Earl. What was Earl's last name? I can't remember his last name, but I'll think of it in a second. Torkelson, Earl Torkelson out of Iowa. And on the hotline that night, I said, we're long these November beans, and I said, if they close near the upper end of the range today, and it was a Friday, and I said, you might not be able to buy them for a couple of days. They might go limit up, several days. And they closed right near limit up on Friday, and the next morning they went limit Monday, Tuesday, Wednesday. And the following week, I get a case of Dom Perignon. Well, it was 6 bottles. There were 6 bottles of Dom Perignon were delivered to the trading house, and it was from Earl. And I called him up and I said, "What the heck is this for?" He said, "Well, for that recommendation, to buy more beans on Friday." I said, "Earl," I said, "I didn't say that. I just said that they might go up the limit." I said, "I wasn't giving any, recommendation," but I remember it very vividly because of that. And one other thing, Mr. Z, is I had a daughter that was just getting out of University of California, Berkeley, and she had been accepted to go to one of the schools back east, a very expensive one in Boston. And because of me being her papa, I was responsible for that tuition, and it was not cheap. And so what I did was I had bought some calls. I'd bought some soybean calls about 2 months earlier, and I said, well, if this goes up, she's going to go to school. If not, she'll be, taking a job in industry. But anyway, it turned out to be pretty good. But I remember it very, very vividly, and it was very exciting time, as they all are. Just one thing, when you talk about some of these old things, I remember some of these markets like it was yesterday, and that was a real thing. Someone's asked a question about the copper. Copper's just in this trading range, folks, from 310 on the bottom and 320 on the top. I don't know when it's going to rectify, but it doesn't look like it wants to break right now. So my assumption is we've got another potential move coming in copper if it can break out. But on the same token, if it closes below 308 a pound in copper, that would be a very, very negative sign. Let's just take a quick look at what we did from the newsletter last week in the old high grade and see what it looked like, because you can see here, and this shows it pretty easily. It's done exactly what we thought it was going to do. We're right in this area. You can see the importance of that 1305. If we break that to the downside, that would tell us that we're most probably going. But we stopped, right at the 61% retracement this week, folks, right around 311. I don't know where it's trading this morning, but that 311 is a very, very important spot, to keep a look at for it. It's very, 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 very important. Was one other market that we talked about, U.S. Steel. I wanted to make sure you folks had a chance to look at that. There was another one that was really interesting to me. It was a soybean meal. Just give me 1 second here. I wanted to bring this up. By the way, that natural gas is continuing to go higher, thanks to Mr. Z telling us to take a look at that. They had that beautiful triple bottom down there. But if we take a look here at the it's 308. That's right at the 78% level, Danny. Anything below 308 is not good for copper. So if you see a 306 print, that we're most probably getting ready to have a pretty big break in the copper. Now, the one I want to talk about right now is this soybean market, because, we're in the midst of this drought in Argentina. But, folks, this has been a really bad week for weather in Argentina. It's been hot and dry, very little rain coming in, and yet look what's happened to the beans. They're down. They're down from their highs. And meal has broken over $2,000 a contract this week. So that's it's a big thing. So we've got to pay attention to that, because the weather, if markets can't go up on really good news, they've only got one place to go, and that's down. So be particularly aware of that, because this could change in a moment, of course. So but that's what you're looking at. If you have good news and the market doesn't go up, 99% of the time they're going to go down. Same thing with bad news. A perfect example of that was the hogs. The hogs went down there and they took out those lows by just a little bit, and then reversed. That was I didn't look at the closing price yesterday, but we broke that key level at 66.50, down about 10 cents below that 66.20, and then immediately reversed. So there's another situation where these tariffs really didn't mean much even to the hog market. So that's another one to take a look at. So that's what we're watching here this morning. Okay, we got one other thing that I wanted to talk about, and that is this Japanese yen, because we have been down at this level for so many times now. Whether this is going to be strong support here at the 61% retracement. So far, it's held the 105 and change level. We're trading just a little above the 105 level now, but anything below 105 tells us that we're looking at something really sinister here in the dollar yen, taking it down, possibly down to the 95 level. And that is a very, very key level. That goes back support from the last 4 years. So we'll watch this one also very closely. One other thing that I wanted to mention about the webinar that Adrian Togaray from Trading on Target put on risk, that is archived, and you'll be able to listen to it if you would like. So all you have to do is to go to TFNN, and it should be archived. Let's try it again. Let me go to Trading on Target, and it should be a really good. It was really good. So if you're interested in how to control risk, that would be a very good thing to attend. It would be important, in my opinion. Now, there's a possibility of yen, the par coming. You're right. They could easily get down to 100 again. That would not be any trouble at all. So we'll it's got to get through a lot of numbers before it gets to 100. But the first key is it's got to get below that 105 level. That's the really super key level. So that's the main thing. Someone's asking, but Mr. Z, if you're asking Byron, we're feeder cattle, first of all, he's a vegan. Well, not anymore. He does have meat once in a while, but he doesn't trade cattle. He remembers what my grandma said. I can't repeat that, but anyway, you don't trade feeder cattle. In fact, when's the last time you traded live cattle, Byron?
8 years ago.
8 years ago, he traded live cattle. He spends all of his time in the foreign exchange and financials and stuff, bonds and stuff. He doesn't really look at the. You didn't even trade cattle on the floor either, did you? No, he's not a cattle trader. Yeah, he's an ethical vegetarian. You got it. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to relate to you one other story that Byron just reminded me of back in the 80s. It was in the pork belly pit, and there was a report that came out on pork bellies, and they went limit down, limit up, limit down, and limit up, and settled unchanged. And at the end of the day, there was one broker in the pit. I don't remember his last name. His first name was Lenny, and he basically took the money out of his pocket. He had some paper money, and he just threw it in the pit and screamed. He says, "Go ahead, take it all." He said, "You've got the rest of it." And of course, you get fined anytime you showed money in the pit. I mean, it didn't make any difference what it was. If you showed cash money down there, was a $100 fine? Yeah, it was a $100 fine just if you showed money. But anyway, that's probably one of the reasons why pork bellies don't trade anymore. But boy, they were a great trading market for many, many years. Folks, keep a really close eye out here in the S&P, because if we close above that, if we get above this 2746 level, that would be a very, very bullish thing. Anything, if we close below 2720, that would not be so bullish. So keep an eye on it. We got the jobs report tomorrow, so it's going to be a little crazy. And also we have Norm Winsky as our guest tomorrow, talking about the retrograde motion of Jupiter that we're setting over tomorrow, and then also the fact that we have retrograde coming for the Mercury on the 22nd of the month, which is one day after the spring equinox, which is always an interesting one, to look at. So those are the ones that we're sort of keeping an eye on this morning. And remember, the Canadian dollar above 130.50, you don't want to be short. The same thing in the euro above 124.50, you don't want to be short. So those are the main things that you want to sort of keep an eye on this morning, because we do have some active markets in here, and they respond to the news, like you can't believe it. Remember, the news, even though it looks bearish sometimes, certainly wasn't. Look what happened with the tariffs and the S&P. Came back and got it all back, and the NASDAQ, made higher highs. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em!